Imagine a company, right? Over 70 years of history. Starts in India, but now its products are on tables in, what, over 80 countries?
Yeah, it's not just some local success story anymore.
No, exactly. It's a proper global FMCG player, a powerhouse in the food industry. We're talking about LT Foods.
And they've just dropped their Q1 FY26 results. Some really impressive numbers in there.
Totally. So today, we're doing a deep dive into exactly that LT Foods Ltd. First quarter fiscal 25-26.
Yep. We've got the investor presentation, the official board meeting outcome, the press release, all the good stuff.
Our mission, basically, is to unpack those key financials, look at what's working operationally, maybe what's not.
Shine a light on the challenges, too.
Right, and there's some surprising strategic moves and, this really fascinating legal story that's still playing out.
Yeah, that's quite something. We'll try and help you understand what makes this global player really tick.
So if you follow the food industry, or maybe you're just interested in international business, or you just like a good company story, balancing that legacy with innovation.
You should get some aha moments out of this.
Definitely. Okay, let's get into it.
Let's do it.
So let's start with that big picture, because honestly, the headline figures for Q1 FY26 really jump out. Highest ever quarterly revenue and EBITDA for LT Foods. What are we looking at number-wise?
You're right, they really stand out. Revenue, it climbed to 2,501 crores. That's a big jump, 20% up from the same time last year.
Which is about 2,088 crores, right?
Exactly, Q1 FY25. And EBITDA, that's at 302 crores, up a solid 17% year over year from 258 crores.
And profit after tax, the PPT.
That saw healthy growth too. 9% increase, hitting 169 crores.
Those are really strong growth figures.
Yeah.
And I saw the MD and CEO, Mr. Ashwani Arora, he commented on this, saying it builds on crossing that billion-dollar revenue mark they hit in FY25.
Yeah, he stressed it reflects, consumer trust and their commitment to quality, standard but important commentary.
Totally. The top-line growth looks great.
Definitely shows strong demand, strong brands.
Okay, but here's where, for me, it gets really interesting. The margin story. Gross profit margin actually went up by 110 basis points.
Yeah, 1.1 percentage points, rose from 33.5% to 34.7%. They mentioned lower input costs helping there.
Right. But then the EBITDA and PAT margins dipped slightly. EBITDA margin down 30 basis points to 12.1%. PAT margin down 60 basis points to 6.7%. So what's going on? Is that like a warning sign?
Well, that's a really sharp question. And no, it doesn't seem like a red flag in the usual sense.
Okay.
The company explicitly says that slight dip is because they increased their brand investments.
Ah, okay. So they're spending more on marketing.
Exactly. It signals a strategic choice, a push for growth. They're choosing to invest more in marketing, building the brand right now, even if it kind of hits the short-term profit percentages a little.
So it's spending money to make money, basically. Long-term play.
Pretty much. Classic move when you're betting on grabbing more market share down the line. Okay, that makes sense. So with that financial overview, let's dive into what's actually driving these numbers, starting with the core, right? Basmati and other specialty rice.
Yeah, that's still the engine. It represents 85% of their total revenue in Q1. Still dominant.
And how did that segment perform?
Really robust. 18% year-over-year revenue growth, hit 2,124 crores, driven by strong demand, pretty much across the board geographically.
And their brands are key here. Royal in North America.
Oh, yeah. #1 Basmati brand there commands a massive 54% market share in Basmati imports.
54%. That's huge. And then Daawat in India.
That's the #2 Basmati brand in India, holds about 25.2% market share based on MATI figures for June 25.
What really struck me, though, is Daawat's penetration in India. It says it expanded significantly, reaching 56.2 lakh homes by March 2025. That's up from 45.6 lakh just 2 years before.
Yeah, 56.2 lakh. That's over 5.6 million households.
What does that kind of jump really mean strategically, getting into 1 million more homes?
Well, it's huge. It shows their distribution is getting better and the brand loyalty is strengthening. You're not just selling more bags of rice, you're becoming a staple in more kitchens. That builds a really solid customer base.
Makes sense. And geographically within this segment.
Bit of a mixed bag, actually.
Right.
North America grew a strong 32%. Continental Europe was outstanding, up 57%, helped by expansion in the UK.
Wow, 57% in Europe.
Yeah. But on the flip side, the Middle East saw a pretty sharp decline for this segment, down 33% year over year.
Interesting regional dynamic there. Something to watch. And we can't ignore the acquisition they finalized.
Right, Golden Star. They bought the remaining 49% in May 2025, so they own 100% now.
How big a deal is that?
It's pretty significant. Golden Star is now the #1 jasmine rice brand in the USA.
Ah, so expanding beyond Basmati.
Exactly. It fits right into their inorganic growth strategy. Diversifies their main rice business, strengthens their U.S. position overall.
Okay, so Basmati is the core, but they're not just a one-trick pony. Let's talk about the organic foods and ingredients segment. That seems to be a real growth engine.
It really is. And they frame it with this purpose-driven for a better tomorrow approach.
Right, I saw that. They talk about 30-plus years experience working with 80,000 farming families, 110,000 hectares of organic land. It's quite the story.
And the numbers back it up. That segment grew a remarkable 32% year over year in Q1, reaching 293 crores.
What's driving that growth?
Primarily expanded distribution in Europe and the US shows their global footprint is really paying off here.
And they seem to be leading India's organic exports in several categories.
Yeah, the numbers are pretty wild, like 78% share in organic rice exports, 85% in organic oilseeds, 52% in pulses and lentils. Overall, 12% share in organic food exports from India, reaching 25 countries.
That's substantial. And they opened a new facility in Rotterdam to support this.
Yep, Nature Biofoods Ltd. opened one in Maasvlakte, clearly needed to support those global ambitions, especially in Europe.
Okay, but speaking of global trade, there's a bit of a snag here, isn't there, this legal challenge?
Ah, yes. The countervailing duty, the CVD. Their subsidiary, Ecopure Specialties Limited. The U.S. Department of Commerce hit them with a preliminary determination.
And the rate is huge. 340.27% CVD on organic soybean meal exports from India. What exactly is a countervailing duty again?
It's basically a tariff the U.S. puts on imports they think received unfair government subsidies in their home country. It's meant to, level the playing field for U.S. producers.
Right, and 340% is hefty.
Right.
What's Ecopure doing about it?
They're fighting it. Filed a case brief, plan to file a rebuttal, and they're ready to take it to the Court of International Trade if they need to.
And the company's stance?
They seem pretty confident. They stated they believe they have a strong legal position and don't expect it to have a material impact on their financials.
Okay, so confidence despite the big number. Definitely one to keep an eye on.
For sure. Now, should we pivot to the ready-to-heat and ready-to-cook segment? RTC.
Yeah, let's do that. Because this one actually saw a decline, right?
Yeah.
16% year-over-year revenue drop, down to 47 crores. That seems to buck the trend.
It does. And the reason they gave is interesting.
Was it?
Two main things. One, they discontinued a specific product line, Daawat Sehat.
Okay.
And two, they were apparently running at full capacity already, so they couldn't take on new business in this area.
So less about falling demand and more about internal adjustments and capacity limits.
Seems that way, yeah. It's a transition phase, perhaps.
Because despite that overall dip, they do have positive things happening here. Plans to double capacity.
Exactly. They want to produce over 1 million pouches a month, so they're clearly betting on future growth.
And some specific products are doing well.
Yeah, like kari kari, those Japanese rice crackers. They highlighted over 40% year-over-year growth for that.
Why kari kari? What's the hook?
They're pushing attributes like it being roasted, not fried, having a unique texture, plus being vegan and gluten-free. Ticks a lot of current trend boxes.
Makes sense. And e-commerce seems strong here, too.
Very strong. Ready-to-heat kits up 50% year-over-year online, and cup of rice saw like 3x growth year-over-year. So digital channels are working for these convenience products.
Okay, so a segment in transition, but with pockets of real strength and plans for expansion.
Precisely.
Now, looking more broadly at their strategy, their operational levers, they're clearly not standing still. That Shah Rukh Khan collaboration is pretty high profile.
Oh, yeah. The king of Bollywood teams up with the king of Basmati. You can't miss that tagline.
What kind of impact does something like that have?
Well, they mentioned their print campaigns alone reached 1.52 crore households in India.
Wow, that's over 15 million homes just from print. Huge reach.
Massive brand reinforcement. And they're also pushing hard on the digital transformation front.
Right, building a smart and intelligent enterprise. What does that actually mean in practice? They're aiming for 1.5x to 2x business value from it.
It means using tech across the board, basically. Supply chain decision-making. They even cited in an internal case study where digital supply chain changes apparently led to 2x revenue growth in that area.
So it's about efficiency, data, getting smarter.
Pretty much. And their overall strategy seems clear. Solidify the core rice business, widen distribution.
Yeah, 1,400 plus distributors, nearly 200,000 outlets in India, plus that focus on e-commerce and quick commerce.
Right. Expand the product range and keep looking for smart acquisitions like Golden Star showed.
And we should mention the ESG side too, First Sustainability Report, that nurturing goodness mission. But they're also great place to work certified.
Absolutely. That stuff matters more and more to consumers and investors. It's part of the modern corporate package.
Definitely. Okay, shifting gears slightly to financial health again, beyond the top line. What about key ratios? How's the balance sheet looking?
Pretty healthy, actually. Working capital days improved, down to 195 days from 202. Better cash management.
Good sign. What about returns?
Return on capital employed, ROCE, stood at a strong 21.1%. Shows they're using their capital efficiently to generate profit.
And ROE, return on equity.
Also solid at 17.1%. And crucially, the debt levels look very manageable. Net debt to equity is just 0.24, and net debt to EBITDA is 0.81.
So not over-leveraged.
Not at all. Very comfortable levels for a company this size.
And good news for shareholders, too. They declared an interim dividend.
Yep, €1 per share for FY26. Record date August 1st. Paid out within 30 days. A direct cash return.
Always nice to see. Shows confidence from the board.
Definitely.
Okay, now, let's tackle perhaps the most, unique part of these results. The fire insurance claim.
Yes. The saga.
It really is a saga. It's this huge, long-running thing. A claim for, 13,410 lakhs, over 1.3 billion rupees, dating back to a fire at Daawat Foods Ltd. in FY 2014-15.
That's the one. It's been winding its way through the courts for years.
So walk us through it. The insurance company initially just said no.
Yeah, they repudiated the claim, refused to pay, so Daawat Foods sued them. They won. Big time. At the district court back in December 2023, the court ordered the insurance company to pay not just the claim amount, but also a huge chunk of interest. The total came to over 28,400 lakhs.
28,000 lakhs. Wow. So insurance company paid up?
Not so fast. They appealed to the High Court in May 2024.
Naturally.
The High Court agreed to hear the appeal, but, and this is key, they rejected the insurer's request to pause the payment order. They still had to deposit the money.
Okay, so the pressure was on. Did it end there?
Nope. The insurer went again, this time to the Supreme Court, challenging the High Court's refusal to grant that stay.
This is getting complicated. What did the Supreme Court say?
They shut down the insurer's appeal in July 2024, and they even ordered the insurance company to bear the cost of the bank guarantee that Daawat Foods needed to get the money released.
So another win for Daawat Foods.
Pretty much. Then, in January 2025, the Supreme Court clarified further. The entire amount, principal plus all that interest, had to be deposited within 2 months, and the bank guarantee costs split 50-50.
So did the money finally arrive?
It did. In March 2025, the insurance company deposited a massive 26,503 lakhs. That covered the original claim and a huge amount of interest.
And Daawat Foods got it.
Yes, the funds were released to them in April 2025, but against a 100% bank guarantee.
Ah, the bank guarantee. Now here's the accounting twist, right? Even though they have the cash, LT Foods isn't booking it all as income yet.
Exactly. That whole amount, plus the interest it's earning now, nearly 500 lakhs just in Q1 FY26, is sitting on their books as a liability.
Why be so cautious when the cash is literally in the bank?
Because the main High Court appeal from the insurance company is still technically pending. The final legal word hasn't been spoken yet.
I see.
So management is being super conservative. They're confident about recovering the original claim amount, the 13,410 lakhs, but all that extra interest. They're not recognizing that gain until the courts give the absolute final okay.
That's fascinating. It's a real case study in prudent financial reporting under legal uncertainty.
It really is. You don't book the win until it's absolutely, undeniably won in the highest court.
Okay, so wrapping this up, we've seen LT Foods post strong Q1 FY26 results, solid growth driven by Basmati and specialty rice globally, plus impressive strides in organics.
Yeah, and they're strategically investing in brands and digital, even while navigating, challenges in the ready-to-heat segment and this incredibly complex, long-running insurance battle.
This deep dive really shows a company that's properly global, integrated from farm to fork, as they say. They're adapting, growing organically, and making smart acquisitions like Golden Star.
It paints a picture of resilience, definitely,
Yeah.
and strategic thinking and a pretty fast-moving market.
So maybe the final thought to leave everyone with is this. You got this huge global network, this digital push, and this massive, nearly resolved historical liability. How does LT Foods leverage all these pieces moving forward?
Right. How do they use these strengths to really cement their position in the global food market in the next few years? And maybe what can other big FMCG players learn from how LT Foods is balancing growth, innovation, and dealing with these tricky legacy legal issues?
Exactly. Something to definitely chew on. A fascinating look at LT Foods.
Absolutely.